Going all in on something must take a lot of conviction.
How many chairs are you sitting on right now?
How many chairs are you sitting on right now? How many chairs are you sitting on right now?
One.
Are you all in on the chair? You put on one pair of glasses, you've got one pair of AirPods, you're looking at me through one screen. That's one microphone. Like, you trust it? Is that conviction? Is that conviction? How many chairs are you sitting on right now?
One.
Are you all in on the chair?
One.
How many chairs are you sitting on right now? If you're a rational individual, when you use knives, do you have copper knives, wooden knives, steel knives, aluminum knives, rubber band knives, diamond knives, because you're afraid to commit to the right knife? It's a tool. Seems kind of scary. Why don't you diversify? Why don't you use 10 microphones? The point really is, things in your life, did you drive in 10 cars at the same time or one car at one time? Do you drive down one street? Aren't you afraid that you're driving down one street? Do you think a different way? You know? So my point really is, how many chairs are you sitting on right now?
One.
Are you all in on the chair?
One.
How many chairs are you sitting on right now?
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks moved higher on Wednesday, looking to add to a run of wins on the last day of trading before Thanksgiving as Wall Street stays upbeat on an interest rate cut next month. And guys, stocks were looking a little bit shaky in the pre-market. They put in a bottom and just rallied into the day today, into the Thanksgiving holiday here on Thursday, guys, and it was bullish through and through. Now, Meta and Google did take a break in terms of the mega caps, but these two were actually outperformers coming into this week. We did see healthcare wobble here and there. Eli Lilly was down 0.41%. DE John Deere was down because of earnings, and a couple of names here in the software space on the back of Workday's earnings that felt the pain. CRM, INTU, and ServiceNow were down, as Workday was down 8% after its subscription revenue missed expectations, but everything else was green. Look at the mega caps: Microsoft, Nvidia, Google, the semi-trade. Apple was up, infrastructure was up, Oracle was up 4%, Palantir gained, Amazon gained, Tesla gained. It was just a green day through and through, and financials also participated, but so too did the smaller sectors. I mean, if we look at it like this, you can see right here, the S&P 500 was up 0.87%. The Russell 2000 outperforming the S&P 500, but just gains everywhere, led by technology. Tech was up 1.39%, but followed by materials, energy, utilities, staples up there as well. Financials gaining in excess of 1%. And this really goes to show how strong the day was. We had 6 sectors in excess of 1% gains here on the day. Absolutely insane. But real estate participated too. Consumer discretionary participated too. Communication services was green despite Google and Meta both posting red, and they account for about 80% of the sector. So it really goes to show the rotation we're seeing happening under the hood. And the only red sector was actually healthcare right here. But a lot of the smaller healthcare names like Molina and Oscar were actually up like 7-8% today. So the growth healthcare names definitely did perform today. And you saw it really was a day for mid caps, for small caps, but growth as a whole outperformed. You could see right here, large cap growth, small cap growth really putting in the work. We saw value and core on the growth side not perform as well, but just a green day through and through, and very, very solid momentum. The type of follow through we definitely wanted to see in the market here today. Now, why was the market green? I think number one, seasonally speaking, it's just a very bullish time period of the year. We know mid to end November is a very, very bullish year for the S&P 500. And we also got the data that we kind of wanted, right? We could see initial jobless claims came roughly in line. So the labor market continues to be where it is. In other words, low hire, but low fire market. Durable goods orders came in slightly better than expected, right? So this is telling us, hey, businesses are probably doing all right. But the Chicago PMIs went absolutely disaster. The manufacturing Chicago numbers came in at 36.3 versus 44.3. Just a disaster number. And as a result, rate cut expectations are now at 83%. And ultimately, that's what the market is looking for. It's looking for its sugar hit. I showed you a chart in yesterday's video. Go check out yesterday's video where the stock market was tracking rate cut expectations, right? And when rate cut expectations ratcheted up, so too did stocks. When rate cut expectations were falling, so too did stocks. And this is why we saw stocks wobble in the last couple of weeks, but rally here over the last 3 to 4 trading days. At the same time, JP Morgan came out and said, at least one of its strategists came out and said that 2026 will be another good year for US investors. The firm's equity strategy team, led by Duraco, set a year-end price target of 7,500 for the S&P 500, right? Here's the crazy thing though. Should the Federal Reserve continue cutting interest rates, the bank does think S&P 500 could surpass 8,000 in the year 2026. So you're looking at 7,500 as their base case, 8,000 as their bull case. What's their bear case? They didn't actually give us one, but very, very bullish price action. And right now, it's looking like we are going to get a cut in March and June. That's what the market is pricing in, along with one in December. And then looking at some of the market movers, Robinhood was up 10%. Big move Wednesday morning following the news that the investing platform is launching a futures and derivatives exchange in partnership with Susquehanna International Group through the acquisition of LedgeX. The investors obviously like this move, and Robinhood up 10% on the day. Absolutely insane. The stock is up 270% year to date. Absolutely insane stuff. Year to date, guys, just a big move. Oracle Corporation was up 4% after Deutsche Bank came out and said the risk to reward looks very attractive right now. Since the pullback, Deutsche Bank reiterated their buy and price target of $375 per share for Oracle shares, which represents 90 to 95% upside from its last price. And then we did have some earnings execution problems here. Deere and Company, shares of the agricultural and construction machinery company, fell after the company lowered its full-year earnings guidance during the third quarter, signaling persistent challenges in the agricultural market. The company now expects full-year earnings between 4 to 4.75 billion, a significant miss to the analyst consensus of roughly 5 billion. Crazy miss, actually. This forecast overshadowed its third quarter results, where both revenue and earnings per share surpassed Wall Street's estimates, right? So it was a great quarter, bad guidance, stock got crushed, down 4% when the market is bright green. And despite that, management said that the market environment is still very challenged, and that's why they have this weaker outlook. The company's margins also declined, and it just wasn't a good report. I do think if today wasn't green, the stock would probably be down like 7 or 8%, and it probably goes lower over the next couple of weeks to really find a proper low. You could see today it was only down 4% because the market was just so strong today. And then for everything we saw today, guys, 4,200 advances, 1,900 decliners. We saw net inflows or outflows in the Nasdaq 100 and New York Stock Exchange. However, if you measure from the gap up from yesterday, we actually saw heavy inflows in the market with the S&P 500 deep in the green. And we're officially there, guys. We've recaptured all of our moving averages, the 5-day all the way to the 200-day. So short-term, long-term, medium-term averages look sound. And oftentimes when we do get this right, it means momentum has been built in the market. And you know what we say on this channel all the time, momentum brings momentum. So I do think we go higher. I do think we see all-time highs for the S&P 500, the Nasdaq 100, the Russell 2000, the equal weight S&P 500. Let's hop on the charts. Now, looking at the chart right here, guys, very green day led by the Russell 2000, profitable small caps, mid caps, you can see, but just a strong day through and through. The S&P 500 up just shy of 1%. Same with the Nasdaq 100. Look at this weekly candle right here. Very, very strong stuff. 3 red weeks looking like a green week here on the short and trading week. I think the market, just for record, guys, is actually closed tomorrow on Thursday and open only until 1 p.m. on Friday. And that's actually going to be just to settle some options that the market has before December. So we are going into a seasonally bullish time period of the year, which is December, on some very strong momentum here on the back end of November. Now, looking at the international markets, they were bullish as well. Europe, the Middle East, India, China, not so much, but just bullish momentum, through and through here in the market. Looking at crypto rallied as well, guys. In the pre-market, Ethereum was down about 1.8%. Bitcoin was down about 1%. Solana was down about 1.5%. So they actually see this move, right? Really, really good. And Ethereum actually recaptured the $3,000 mark. Bitcoin touched 90K at some point. Very, very solid stuff. And then looking at some of our macro indicators, volatility continues to move down. We've been saying this for a while. We said 25 was looking a bit stretched. We're going to see volatility compress. And that's actually been the base case. We've been saying that if we didn't break this key level right here, go check out last week's videos. If we don't break the key level right here of 65.50, we probably will go higher. That's exactly what we're seeing right now. And it does look like this follow through has legs. I wouldn't be surprised to see new all-time highs for the S&P 500 before the end of the year. The dollar did fall. Yields were a bit mixed. The 10-year yield was flat. 2-year yield did rise ever so slightly, and I think that had to do with some of the data we got today. Though that durable goods data was just a little bit stronger than what the market expected, along with the initial jobless claims data coming in slightly better than expected at 216 versus 225k. That being said, on the longer term, it didn't really move, and I think that had to do with that manufacturing data, that Chicago PMI. So I think that's ultimately why the markets moved here for the 2-year and 10-year yield. Gold was up 0.86%. Silver was up 3.6%. Big move here in the silver trade. Crude was up 1%. And despite a lot of news that there's going to be a supply glut in 2026, I think some bank has like a price target for for crude that's like $35, something like that. It might be Deutsche Bank. I don't know, but yeah, they think crude will continue to be oversupplied through 2026, and ultimately that's going to really help the consumer and inflation. But let's go ahead and talk about the S&P 500. Now, this is the weekly chart. We know this factually that the weekly chart looks great. Every single day on this channel, I come on this chart and I say, the weekly chart looks good, right? The weekly chart does look good. It simply does. And look, we did have a little bit of a wobble year, 4 down weeks, 4 red weeks, but we in a single 3-day span, right? We paired all of those gains, or nearly all of those losses on the way down. So very, very solid stuff. When we go on the daily chart, right, you can see that wobble happened right here. We hit all-time highs, and then we had some concerns with the AI trade, Oracle, Nvidia. So the earnings wasn't as good as we expected. However, when you look at everything in aggregate, we said this was the key level that we needed to hold. If we break down below here, we would move to the 61.30 area. We did not break down. We put in a bottom, and now we are targeting some key levels. So we said that we want to go ahead and break above this level right here. You see this candle? We did that. The next key area is now this level right here. We'll see what happens with Thanksgiving. It's going to be low volume, so some of the moves can be faded, can be trusted, can be quite volatile. But if we can go ahead and actually retake, call it the 68.70 area, right, that opens up all-time highs. But this move has legs. I do think we go higher in the S&P 500, the Nasdaq 100 as well. I think we're going to see outperformance in small caps, especially as rate cuts come to par. I mean, guys, just for the record, this is all-time highs here for the Russell 2000. And as long as rate cuts are on the table in December, March, and June, 25 basis points each, right? Small caps, mid caps, equal weighted S&P 500 should do really, really well, in my personal opinion. And this is now looking like just a garden variety pullback that we had and going higher right there. So very, very solid stuff. And this is why we generally just stay invested in the channel. And guys, remember the framework I always say. I say every 5% pullback, you actually want to go ahead and deploy some capital so you can actually sort of scale in at the lows. And every 5%, every 10% thereafter, and then at 15%, right? And then at 20%. And the reason why is because the average S&P 500 drawdown is 23%, right? So if you do this, you're going to have 4 decent buys to deploy capital in the market and likely going to capture the upside. Sure, you're not going to time the bottom. No one can time the bottom, but this is a good framework. And for the S&P 500, if we actually just zoom in right here, if we take a peak to trough move, right? You can see we were down 5.78%. So had you followed my framework, you would have had one great buy pretty much at the low right here, right? So I actually did that. I was buying a lot of Bitcoin. I was buying a lot of equity. I also did buy BMNR. I did buy a couple of the AI names as well. I deployed a lot of capital, all of the names that I spoke about on here. Now, some of these names were significantly more. For example, if you go ahead and look at Meta was down in excess of 20% from its highs. You could see right here a 25% drawdown. And then if you go ahead and look at Nvidia, which to me, this is actually crazy because Nvidia is still down about 15% from its all-time highs. Let's actually quickly measure it from where it is right now. Yeah, it's down about 14% from its all-time highs, but the S&P 500 is about 1% away from all-time highs, right? So very, very interesting that we are starting to see a broadening. We certainly are starting to see a broadening, and we're seeing it in the Russell 2000. We're seeing it in the equal-weighted S&P 500. We're seeing it across all of these assets. Look at the SP 600, right? Pretty much at its all-time highs. This is profitable small caps, pretty much at all-time highs, equal highs right here. Very, very strong stuff. This looks like it wants to go higher. This looks super, super bullish. We could see somewhat of a technical breakout right here, just a technical breakout, and then move from there into all-time highs, into price discovery. And ultimately, that's what I do see into 2026. Now, as long as rate cuts stay on the table, I think these stocks should do really, really well. Now, you guys know the stock that I do like. Number one, APLD. This is Applied Digital. It's a data center play. I think we are starting to see a bottom right here. I think this is a great place to probably go ahead and start buying this name. Essentially, this is like a REIT for data centers. So if you want to play the real estate theme and the AI data center theme, APLD is where you want to be. I do like Iris Energy. Iris Energy is just a vertically integrated data center place. So it owns the land, it owns the data centers, and you can have companies rent out their space and putting GPUs in their data centers, and they focus on cooling a lot, and their energy is really, really great. They have great energy deals. But I do think that we're looking at Iron trying to put in a bottom right here as well, and Iron very good today, up 2.82%. If you want some of the bigger names, NBIS is one that I do like as well. NBIS was up 4% here today. And again, all of these AI names are trying to put in a bottom or starting to put in a bottom, which is really, really good because a lot of these names, if you do measure it peak to trough, they actually did get hammered. They were down like 44%. So it is going to take a little bit of time, a little bit of confidence to build back into the market to form these lows. But I do think these stocks eventually go higher in 2026 because the AI the mega caps are not going to stop spending. And we do know that the Genesis project, the government is now going to be investing into these data center names. Now, if we go ahead and look at Oracle, I think this is actually great value in terms of the mega caps. Now, Oracle had a massive move on its earnings right here with that OpenAI deal and has retraced everything and some. And I think the risk to reward is great here, especially for a trade. I mean, there are some concerning stuff with negative cash flow, but I do think we're probably going to see a bottom right here. And I do think Oracle goes ahead and retakes its all-time highs much sooner rather than later. You can't keep a name down like this for very long. So those are the AI names I do like. I just like these smaller names as well. You can just generate more alpha. EOS, Energy Enterprises as well, guys. They're all putting in a bottom, starting to put in a bottom right here. EOSE was up 6% in today's trade. So, you're definitely going to start to see a bottom in these AI names. But when you actually look at names like Coca-Cola, right? It's symbol KO. These are pretty much trading at its all-time high. So the broader economy really, really is doing well. When you look at names like Apple, right? Apple pretty much trading near its highs, notching all-time highs, as you can see right there. But some of these AI names not looking super good. But I think the AI names are giving you a really, really good discount right now. But I also wouldn't be surprised that you should probably also be allocated to some of the stuff like the S&P 500 and the Nasdaq 100. Now, I've been talking a lot about the AI trade. Let's talk about crypto really, really quickly here, guys. Bitcoin, it does look like it's officially putting in the bottom. It's ratcheted off these lows. It's got a long way to go, but I do think that the key right now is a close above the 90,000. If we can get that before the end of the week, a close above 90,000, I think that opens up 100,000. Very simple play for Bitcoin. We were buying the dip all the way down. If you don't believe me, here are all my Bitcoin buys in the last week from my Bitcoin ETF. This is on my Twitter, guys. Go follow me on Twitter. So you can see here, I bought quite a number of Bitcoin. So you can see right here, I bought $3,800 worth of Bitcoin, and I bought $200 lots on the 19th, the 20th, the 21st, the 24th, the 25th, the 26th. That was just yesterday. I'll probably buy more today. So I do think Bitcoin is probably going to go higher. I do think think that Ethereum is also going to go higher. But I think what Ethereum needs to do is probably go ahead and have a significant amount of closes above this 3,000 mark just to get some confidence back in the market. Because again, Ethereum peak to trough, 44% drawdown. That's really confidence breaking for a lot of investors. But man, Ethereum bulls have really run through it. I mean, if you take a peak to trough move here for Ethereum, right? Peak to trough, it was down 60% at the start of this year. Then it rallied 300% and now it's down another 40%, but it is putting in a higher low relative to this low right here. And this just looks like constructive price action, if you ask me. Very volatile. And these are more long duration assets looking at it. Guys, looking at gold, we do know the play with gold. It's trying to find a bottom right here. I think gold is probably going to trade sideways and then make its next move to the upside. I think 2026 is going to be a good year for gold. So don't fight the trend. And ultimately, guys, if we do get dips in this market, buy the dips. And if you think you missed the rally, look at these AI names. A lot of them are 30-40% from its highs. And I do think they're going to retake all-time highs sometime in 2026. If you haven't missed the rally, you just need to allocate yourself to the right stocks. And I think the AI trade stocks, and I do think crypto is the place where you want to be right now to generate alpha into the end of this year, into 2026.
Test 1 2 guys, and diving into sentiment, this is the fear and greed index, and despite all of the bullish momentum we've seen over the last couple of days into this shortened trading Thanksgiving holiday week, we still remain in extreme fear. So the market is still saying, hey, even though we are and have rallied off the lows, right, quite significantly in both small caps, mid caps, and large caps, we're still in extreme fear. And this is telling us the rally has legs, because when we begin to push into fear, into neutral, and eventually into greed, right, we're going to be thanking the stars you bought the fear. And that's ultimately what you want to do. You want to buy the fear. And when we look at the Nasdaq 100 over the 2-day turkey wrap, when the trailing week was positive, right? And that's the setup we have right here. The trailing week was positive, trailing, remember that. The Wednesday into Friday, the return over the 2 days is absolutely insane. About a 1% return in the Nasdaq, 31 up years, 0 down years, exceptionally positive. So while we have momentum right now, seasonally, the market is telling us expect higher prices as we go from November into December, which is a very bullish month looking ahead. Now, when we look at the macro, guys, now GDP still sitting at 4%. We did see a little tick down as some of the data did come in a little bit cooler than expected. So we saw growth expectations taper. However, still very, very solid when we look at the inflation numbers, right? We're sitting at about 2.5% here in PCE inflation, as well as CPI inflation. So, I mean, we've seen inflation come down significantly. We're not quite at the Fed's 2% target, but we are slowly moving there. And you guys want to know something absolutely crazy? When the S&P 500 is in a 1 to 2 and 2 to 3% inflation environment, right? The S&P 500 median returns tend to be the best, right? You see a 13% average return, 11% average return in the respective figures, and then 13% median return, which is incredible. And then the probability of negative returns is also the lowest at 16 and 22%. Long story short, even though we are at 2.5% inflation, equities tend to do really well in this type of environment. Guys, the trading week is shortened, so there's actually no data tomorrow, and the market is closed here for Thanksgiving. So happy Thanksgiving to everybody. And if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.